most of these people that I've talked to, they have an interest in making money in stocks, but there is a wonderful sense of making value for the country that I find here in this gathering. People are trying to estimate what the costs of this peak oil is going to be to the system, and they're trying to find ways around it or through it or over it. That's what we're all trying to do. And most of these people, most of you, as well as us that are speakers, have a comfortable living already because we worked hard and because this is a good area to be in and because there have been many opportunities prior to now. And therefore, I find, and I think others have also, that my thoughts go more and more to good ideas, to ways over the mountain. I'm less interested in the personal side of investment and more interested in what we can do to alleviate the effects of something that we uniquely here in this room see as coming and as powerful and as potentially crushing. So with those thoughts in mind, let me advance. I can't take in really the thought that there are so many crises on which people write today, so many people that are worried about the jungles of Ecuador, and I'm sure the jungles of Ecuador are worth being worried about. But I see right here something that is paramount in effect and will in effect bring in hundreds of other crises when it hits. In the train of the energy crises, the medical crises, and the hospital crises, and the music crises, all of these crises will get substantially worse. So here, this slender band, you know, one is almost reminded of Henry V before the battle. This, you know, and lying there abed in England are all these scallywags that didn't come over here to fight this battle, and they will wish that they were here when the battle is fought and won. So we have a special kind of responsibility, and it's the responsibility of knowledge. And it's amazing that we should have this bestowed on us, because what is so special about the minds here in this room that, I mean, I can't see any uniformity to that. I can't see that you all come from Western colleges or from Southern colleges. I can't see that you are more men than women, as you'd expect in just the industry pattern. I can't see any pattern to it, except that for one reason or another you all have adopted this direction. I think it's such a unique gathering. So let me throw out to you in the most intimate manner all of the thoughts that I have on this subject, because sharing in this case is very important. We all grow much more quickly when research is thrown open and is transparent. To make a living, most of the research firms in the world have to charge for their services. That's not surprising, and it's not illogical, but we don't. Our job here this morning is to reveal as much as we can and have it picked up by you and tested by you, because much of what I'm going to reveal to you is going to be wrong. I just don't know it yet, but it will be wrong. For instance, in solar power, I've worked for about 6 months on some solar power projects, And what I discovered increasingly as time went on until I finally abandoned the project was that even the experts varied tremendously as to where solar power was going or how it would get there. The changes in obsolescence were very fast and very scary, and that it was going to prove to be extremely difficult to make money in solar power, because no sooner would you get a good idea that was, moving forward through the stages of financing, and then early pilot work, and then manufacturing, and about that time it would just be wiped out by the next oncoming wave of technology. Very hard to have that kind of rapid obsolescence and be able to make any money. On the other hand, in wind power, what I found was that that was dominated by a few big companies. They already were at levels that were quite reasonable relative to their prospects. There wasn't that much still left, at least in the United States, particularly good wind prospects, that it was more of a quiet business and less attractive, because a lot of people had already visited that site and already put values into those companies, and they were not, I felt, situated to give you a big rush of new value, which is really what you should be looking for when you're looking at small companies that are just starting out and trying to solve these huge problems. So let me comment that I have found three areas for investment. The first, which I will discuss in some detail, is my own area of big oil companies and medium size. The reason I don't say small size, I do know a few small size companies, but I am not a retail broker, I'm an institutional broker, which means that I don't have people come to me and ask me about small companies. The companies have to be large enough to absorb institutional buying, and that means they have to be pretty large. I go down to about the size of companies like Talisman and Apache, and below that I really don't do any research. I may happen to know the chairman, I may happen to visit some of their sites because it's near Exxon's site or near Chevron's site, but I just have to deal with the larger companies because those are the ones that my institutional customers want me to cover. Then the second area, I would say, would be the energy service area. And it's a unique story and a wonderful story. I don't do the service companies. I have a close lieutenant who does them, but I am with him, a great deal, and I've heard his story 1,000 times, and I can repeat it quite easily. But I want you to know that I'm not a service analyst. There'll be details of that I won't have command of. Nevertheless, I will give you the outline of what he says and why he says it. And then the third area, which I think in some respects is the most interesting of all, is the area that we spoke last night, and some of you just who weren't here to review it, I suggested that in the case of a commodity that is getting tight and prices are beginning to rise owing to that tightness, the classic thing that happens is that, in the case of copper, let's say, is that the rising price allows copper explorers to look or to go to places where they already know large amounts of copper lie that are a little bit more expensive than the levels of mines that are being exploited at the moment. And the higher price allows a lot more activity to take place in higher valued copper ores, and soon very large amounts of new copper are flowing onto the market, and the problem of tightness is rectified. That's a classic reaction, and one that we've seen most commonly. There are occasions, however, when for one reason or another, demand for the product continues to rise, but supply cannot. that's something that some of us believe will become a more common phenomenon over the next 100 years, because in so many cases we are actually running through that commodity in terms of availability of reasonably cost stocks, and therefore you can't meet demand. Prices do rise, and the only way that you can bring supply and demand into balance is to effectively allow the price mechanism to work until it runs up, 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 until some point when it begins to knock out demand. The phrase is demand destruction, and it's a harsh phrase, but it should be a harsh phrase. It's the hardest way to solve a commodity shortage problem, and when you get into demand destruction, sometimes it works at a reasonable price, and sometimes it doesn't work until you reach an unreasonable price. And for a whole variety of reasons, I'm going to suggest that we probably are going to see oil go to unreasonable prices before it strikes home. So in this kind of world that I see ahead, not today, but starting in maybe 2 or 3 years, and lasting through until the early 20s, I would expect that energy conservation will be one of the most powerful fuels that we can bring to bear. You know, oil, gas, coal, nuclear, and conservation. There's a sixth fuel that's, in quotes, that's very much in my mind. It's abstinence. That's just a phrase taken from another kind of work, but it's true. That is the going without. Now, if you're a lumber collecting company with big diesels in Madagascar going up into the mountains to get the mahogany and the teak wood and all of that kind of thing, you know about that because the mountain trails are no longer maintained. The big trucks don't go up these narrow dirt roads anymore. The little lumber communities where the primitive sawmills were made and created over the years, they're now dismembered, and the houses of the people that live there are now leak. And when you go up there, there's no one there to greet you. They've all gone back to the jungle. They have their little patches of yams and that kind of thing, but it's gone. There is just a section of society that has been carried away by the fact that it is now uneconomic to get hardwoods up in the mountains of Madagascar. I think we'll see a lot more of that before we're through. There's so little investment potential in something like that. It is such a loss of what we've already created. It's a loss of mankind's time and focus and history. It's the worst of all worlds when you can't go forward at all. You're just stopped by a blank wall. So I think we will emphasize conservation with as much skill as we can. Conservation and efficiency, they go together. And they will be huge. Now remember, after 30 years of concentration on these, they won't be so important. This is terribly important to say. Conservation is a sometime thing. We'll use a lot of it in this society because we haven't emphasized it before. But it is going to be greater and greater importance to us. But 30 years from now, it isn't going to solve the long-term energy problem. You understand that because the returns on conservation are going to be maximized in the early stages and minimized in the late stages, and then at the end there's not going to be much of a return on conservation at all. And that's why it's of particular interest to us, because we're coming into the period of maximum return. And between now and, say, 2020, I would say that conservation will rule. Okay, maybe oil will get the headlines because oil will be going over its peak and down and so on, and it'll be creating a lot of political and economic unsettlement. But coal is not going to have a powerful role to play until we really get clean coal burning, and that may be a number of years away. Nuclear can't do anything until the 20s in size. Natural gas will be important, but it'll be a switch more from the domestic internal production of gas to the external production of gas being brought in through the LNG and run backwards through the pipelines. So gas will be in a fascinating transition, but probably not growing very much in an overall sense. So that area of what you'd call energy technology, ET, I think is going to be hot, hot, hot. It's going to be like the computer revolution of the 50s and the 60s. You know, you think back on names like DEC and Burroughs. Do you remember these names? I'm trying to think of some of the ones of yesteryear. There were so many computer companies out there. Everyone was a computer company, and then they were all rolled up in the end, and they became part of IBM or part of other organizations. Now they're all gone, and the people from them are gone too. But we are going to have a huge springing of 1,000 flowers, I think. The American brain and the American entrepreneurial spirit is so great. We are just going to come out of the woodwork with stuff, and some of it is going to be fantastic. Of course, the biggest thing that we could possibly bring forward is another couple of energy creation technologies. They're not easy to come by, and I don't know, I know a couple that are being worked on, so I mean it can be done, but I mean something that has the potential to replace a significant amount of oil or gas or nuclear. And it's going to be very hard because we sometimes don't think how big those particular sources are, and thus to replace them is almost an impossible task. But there are some fascinating technologies that I've seen signs of, and we are going to ask you to contribute some of your ideas today, because we know that deeply buried in your consciousness is some people have some ideas about things that could change the world. Those are the ones that I'd love you to come forward with, even if it's pie in the sky. You know, there can be literally some things up there in space, but that's going to take huge organizations. What I think will be most interesting is what individuals can do in garages. That's how it all started in the car industry, if you remember back around 1900. Not that you remember yourself, but you've read history. And I think it's in the garages that some of the greatest ideas will come up. So let me get back to my area, my own area, and tell you that I am looking for the peak of non-OPEC production around 2009, 2010. That's late. That's much more conservative than most. You don't have to believe it. I've done my work, and that's what it shows, but I'm not sure I believe it myself. For one reason is that you try to do the geological work, but overlaying it is always the political, military, social, economic, that changes it all anyway before it ever comes true. Then I have a benchmark of around 211, 212 when I think most of the big companies will peak. That is, the individual company, each one has its own peaking date. They don't know what they are. They don't even think about it. But I tell them what date I've assigned to them, and they all go, oh, golly. And well, they both dispute it, and they're they're sorry that some analyst would say that, because it means that, well, a whole host of things follow from it. Liquidation, a word that strikes terror in their hearts, the end of growth in volumes. I can't tell you how hard it is for an oil company that's been used to laying off on, let's say, 2 or 3% more units each year, giving them economies of scale. And on those 2 or 3% more units with their economies of scale, they're able to lay off about 6% or 7% cost increases, and they have for many years, before all of the last 3 or 4, which are special. And then if there are pricing gains at the bottom line, they can pretty much take them, and they do, and they're very happy with them. And it's been the real guide for them on the upside. But now suddenly they're going flat. Yes, maybe they're down from 3% to 1%, but they're already struggling with the fact that costs are running up around 15 or 18 or 20, and they've got a 1% volume increase or a 0% volume increase, and suddenly the costs are going crazy. And that's what I see happening across the board in the industry, is particularly as we go to flat around 2011, and then by 2013 and 14 we start down. And whatever the costs are, they will be divided each year among fewer units of volume, and now they should be really pushing up costs. So I see for most of the big oil companies what I would call a silver age. Many of you have read the Barron's article that I wrote a couple of years ago, and let me just give you the outline of it. I said that we would be around 67, 68 for the next year or so. By 2010, we'd be at 85. I remember the outrage that I got letters saying, $85? Holy Hannah, you got to be out of your mind. By 2010, you know, it'll be down to 43. And, you know, here we are living with much higher prices. Then for 2015, I put 180. Remember now, this is currency of the day, so 180 might be by then about 150 or 140 in current currency. And then for 2020, when we're over the top and driving downwards with less oil available each year, but the same kind of demand stretch, I had $300. Oh, that occasioned quite an outcry and quite a number of letters. But that 300 is only probably about 200 in currency of the day today, and $200 adjusted for time doesn't seem like too much at all for a date that is out, in this case, nearly 13 years. So that kind of revenue gain should be terrific. So the companies are going to be dealing with runaway costs, runaway revenues, and the net result, I think, is going to be a silver age for the oils. Now you can tell immediately that there's some kind of a limitation in there, or I would have said a golden age. I think it's going to be a silver age. So they're going to go into liquidation. But instead of making a great pile of money, they're going to make good money. But they're going to be liquidating. You know, you say, well, this company is increasing the dividend every year. This company is showing flat earnings, but they're very good, very high levels of return. Very good levels of return? How is he calculating that? If he's liquidating, you can have almost unlimited levels of return. Just liquidate a little faster. These are not going to be good levels of return. Not on new money invested, and there'll be almost very little new money invested. Many of these companies are going to become so discouraged that they're going to, I think, either be liable to take over, and then they'll be dismembered, parceled out into other smaller companies. Or they'll do what Lubrizol did when they bought Amgen stock, begin a process of changing your business from the oil business to something else. I mean, this is what a classic example of this happening would be Italian manufacturing in the 12th and the 13th century. They were the #1 in the world in steel. Their knives, their swords, their armor was the greatest. They were #1 in the world in silk, weaving, everything, cotton weaving, everything but wool weaving, because they didn't have a lot of wool down there. That was mostly Northern Europe. And they made the most beautiful paints, the most beautiful porcelain. They were craftsmen, and they sold that throughout Europe. In fact, they kept trying to sell it to a lot of people around the world. If you really look at Marco Polo carefully, the whole expedition was out there to try to pick up a new market for Italy. And of course, it turned out to be too far to make much of a market, but at least they got to know each other. But by the 14th century, Northern Europe was piling along behind them and catching up very rapidly. Already German steel was very good, and the weaving was particularly good in Holland, and so on. And Italian manufacturers began to wane a bit, and they did more trading, entrepot work, distribution work than they did manufacturing. And by the 15th century, those trading companies were now lending money to their clients and doing more banking work. And by the 16th century, they were out of distribution, they were out of manufacturing, and they were now in the banking business. And as those Italians, many of them Lombards, because they were in northern Italy, went on to other places, they would go to London, and there were so many of them congregated down there in the city that they called it Lombard Street. And then soon the rate that was being charged on Lombard Street for money became known as the Lombard rate. And we still have that phrase. It's still wonderful. You see the Lombard rates raised or lowered, and it goes back to the Italian merchants of the 15th and 16th century. So we had a whole system that was switching over in a logical manner from the manufacture of it to the financing. Whether these big oil companies become financial centers by liquidating and then eventually becoming money center, well, I won't say banks, because I don't think they'll necessarily be in the banking form, but they'll certainly be financial institutions. Or whether they'll break up and go into pieces and go after biotechnology and that kind of thing, chase the new exciting technologies, that will be some will certainly pursue that route. So who will be the survivors in this? Who are the golden people? Well, the golden people are the people that can still increase their production. And that will be a list of companies that start with the Athabasca tar sands producers. And you want to put at the top of your list, I think, and I'm basing this not necessarily on years of reserves, but on prices, on present prospects, on rates of return, on discipline, on management record, on ratios of capitalization, debt to equity, and so on. My first choice would be Encana, E-N-C-A-N-A. Good old American company based in Canada. Where are the American companies? Well, the Canadian raw material base is just bigger and stronger. And number two would be a tie, really, between Suncor, which is the granddaddy of the Athabasca producers. Howard Pugh started it in 1967. If you can go back that far, it's really amazing that he had the vision to see what was all going to happen. And it took that kind of vision. And Canadian Natural Resources, CNQ. So Encana is ECA on the big board. Suncor is SU on the big board. And CNQ is Canadian Natural Resources on the big board. three of the most interesting, stalwart Canadian producers of tar sands, and of course some conventional oil, and of course some conventional gas. My fourth choice would be Lukoil. Yes, there is a huge disconnect there because you're buying Russia, but Russia is improving. Russia is becoming closer to us, even though Putin will say from day to day things that seem to absent himself from the group. There are so many ways in which Russia is becoming part of our world relative to what they were 10 and 20 years ago. Here's an example. Lukoil uses American GAAP accounting. Many of you knew that, but some of you didn't. American GAAP accounting? Lukoil? Why would they do that? No one else uses it in Russia or even in Europe. They want on the New York Stock Exchange. They want a record that investors can look at and understand because they want listing in New York. Why do they want listing in New York? Well, I think the prestige is good, and of course it will increase the value of the shares, I think, when it happens, and management always wants that because they own a lot of the shares. But I think it's more subtle than that. Taxes are huge in Russia. I don't know what Lukoil's return on capital is in Russia, but I'll give you a guess, around 8 or 9%, which is really horrible. And to the degree to which they can move Lukoil's operations outside of Russia, they can make an awful lot more money. They're uniquely placed to make a lot more money. We wouldn't be. We wouldn't be happy if we were moving money from the United States, where maybe we're making a 18% rate of return, to another company where it was 15. But if the Russians can move money out of Russia to 15% return on the other side of the line, they would do so like a shot. Now they can't move money out of Russia, but they can borrow it in New York. And they can trade things off in Russia for those who want to take a longer waiting look at the Russian government. And so the two ways that they will intend to grow abroad is by trading Russian assets against people who are prepared to wait until those assets begin to make good returns, which I think will be down the road a while. And they can also borrow the money, and they can build up their asset base abroad. Today, Lukoil is only 7% abroad, but I think it'll be building very quickly, and the returns will be quite substantially better for them abroad, where they're away from government taxation. Lukoil is not owned at all by the Russian government, at least legally. They're not privy to their board meetings. Doesn't mean the Russian government can't influence them. But it comes down to this. As it happens, Exxon, which, as you know, is always listed in our minds among the big traded American securities, as the #1 oil company, but it is now about number 8 in the world behind the national oil companies. Hard to believe that Exxon is number 8 oil company in the world, but that's just how it turns out. And as it happens, that 22 billion barrels reserve number, which is a barrel of oil equivalent, is equaled by Lukoil. Just coincidental, Lukoil is within 1% of Exxon. And so you can suddenly say, okay, well, they both have approximately the same kind of reserve base, and not dissimilar in terms of heavy, sludgy stuff and light, sweet stuff, but they also, now you can compare capitalizations. And the capitalization of Lukoil is 1/6 the capitalization of Exxon. Now there is where the values begin to jump out of the page at you. It used to be 20 times. Exxon was 20 times the value of Lukoil. So Lukoil is making quite substantial strides. But it's important because you can say that Exxon is worth more than Lukoil, and I couldn't agree more. You could make a case why Exxon is worth double Lukoil because of the greater political stability of the United States, because of the tax laws, because of the record, because of the quality of management, all of these things. You could make a case out, I think, for even 3 and 4 times the value, but I think you have a hard time making a case out for 6 times the value. And then lastly, you have Lukoil's direction. Exxon is going along at the top of the pile, but they're going along really straight. Lukoil is down in the pile of manure, but it's making progress upwards. And someday it'll get up closer to Exxon, I think. And then the PEs will continue to change and the multiples will be favorable for you. So that would be my 4th choice, and my 5th choice would be Petrobras, which is government owned in part, but the government seems content to let them have their way. They are a superior management. They are an emerging country stock. They really, the Brazilians have, you know, I mean, these emerging countries, they don't have any science, they don't have anything. I mean, what in the world are we doing with the Brazilians? What we're doing is we're learning about how to drill deep. The Brazilians have gone up to us and past us, and they are doing a hell of a job with their offshore work. At least it's as good as ours. And I give them a lot of credit for that. And Petrobras, of course, like Lukoil, is now extending its wings to other parts of the world. And they have a certain advantage in that, politically and socially, because people accept that they are from societies that are less advanced than ours and less imperial than ours in the eyes of those who are accepting them. So that's how I would play that. Now, if you had a situation, which I hope you don't, but an institutional situation, you're perhaps head of a trust or something like that, and you have to use big oil names, then I'd say that the big companies are quite disadvantaged here. But you have to use a big name. So let me give you that. It's quite a separate list. All of these names are substantially less attractive than the 5 I gave you. But I would say if you have to have a big name, I'd start with Total. I'd have next ENI. And thirdly, I'd have ConocoPhillips. But I don't go with these big companies. I think that their day is really over. I think it's hard to make a case for why they're going to be there 5 and 10 years from now. I think that the problems that BP are having are probably more structural than they understand. The problems that Royal Dutch has had in the last 3 or 4 years are more structural than they understand. Exxon is not having any problems. Exxon is untouched by the scandals of companies that are not doing well and are reaching to try to do better by means of paper means, fraud, and so on. Exxon knows their business. If you believe that, you believe anything. They really are a shambles. And the example of Lee Raymond, who said, among other things, we will not allow new projects to get through our board that do not make a 15% return at $28 a barrel. Because Exxon believes that we're coming back to $28 a barrel, and they want to be sure that when we get there, that, you know, that they're earning their 15%. Well, I say good luck. Just sit there and just take 15. When it goes to 160, 180, 300, just keep it 28. You'll be liquidating yourself so fast, you won't have to worry about the future because you ain't even going to be there. It's a sad, sad situation. And the example that I gave you yesterday on the jack is the classic one, where Lee said, you know, there'll be plenty of rigs around by 2008, 2009. Price will be down to $30, and these guys will be letting go those expensive rigs like crazy, and we'll be picking them all up out in the Gulf at 50 cents on the dollar. 50 cents on the dollar for leasing. He meant it would be down to 50% of $2.25, which was where it was then. Now it's about $5.50. So I think that Exxon has a structural problem. They are older men. They come from another era. They are doing well because they are straight men. They are honest men. Someone like Lee Raymond has a lot of problems, I think, in some ways, but I think he was always very straight. And honesty will take you a long way. Not all the way, but it'll take you a long way. Someone asked me about Lee once, whom I knew and liked, and I tried to sum up him, and I think the firm would have to follow, in some nice way that would say it all. And I suddenly came on this, and I share it with you just for fun. I commented to them, Lee Raymond is the kind of man who doesn't buy his own toothpaste. Think about it. Isolation from society. Everything is done for you. Your chauffeur picks you up in the morning. You're reading your oil material as you get to work. The guard salutes sharply as you walk through. The elevator man salutes. Life is a dream, except that you're out of touch with reality. And I think Lee lost reality some years ago. So Lee is a man that never buys his own toothpaste. His secretary, I'm sure, was sent down to buy it, and she went in the Woolworths and she mixed with the people and got in the line and bought his toothpaste and maybe a little bit of a couple of toothbrushes, and they got back and gave it to Lee, and he said thanks and went right on with his life. So now if I were going to go on and name a number 3, I'd probably go with Diamond Offshore, because again, you get the deep drilling. And I would pair Diamond Offshore with another company called Pride International that's seen by the majority of people as a jack-up company, which is not quite so attractive, but is actually selling off its assets in such a way that I think, A, it's going to be taken over, and B, jack-ups now only represent 25% of its earnings. The other 75% is deep or medium depth drilling, and this is a high PE business, good growth business, and it sells at about a 40% discount to its peers. So I will leave you with that, but I just think there are these wonderful areas. One quick word of warning I want to be sure to throw in there. I mentioned a geographic frontier would be an example of moving to Dubai because your customers are there. That is a frontier, the Middle East and the Caspian. An economic frontier would be an example of LNG, which wasn't attractive to develop some years back and is now attractive because of the higher prices. So there are these special areas that are attractive. And I want you to think about buying into those frontier areas the companies that are going to realize the most from them. One area that isn't going to realize much, and this is where the warning comes, is the America problem, because we have here some of the best geology in the world. But when I say that we have the worst in the world, what I mean is that as a result of 148 years of picking it over, it is now very largely exploited. We know that smart people can make money here. We know that there are still undiscovered reserves, but we also can look at the numbers and see how small they're getting, how tough it is to do this. And we can see people that are discouraged and going away. Now we see that with the advent of LNG, we think some kind of limit is going to be put on the price of gas. If that's $7 or $8 a thousand, there will be a certain group of higher cost producers. You know, if we're going to use, let's just say for fun, we're going to be drilling with 1,800 rigs, just for fun, then we may be competitive with LNG up to about the 1500th rig. But at around the 1500th rig, those between 1500 and 1800, those are the rigs that are done by the ma and pa shops that are the least efficient. And I think gradually they will fall away, and when they do, the services that go with them, the fracking, the cementing, the perforation, the mud, the filtering, the water, handling of the drill pipe, all of these things will fall away with them because they are excess to the needs of the system. So what I'm saying is that I think that the foreign business, particularly on the new technological, geographical, and economical frontiers, is going to be superb. But you have to pick it carefully. Meanwhile, I think that the American scene as a whole is going to be disappointing to the service companies that are here, and that the Gray Wolfs and the Pattersons will suffer, and the neighbors to some extent, the 50% of the extent that they're in the US, and the BJ services to the extent that they're in the US, those earnings, I think, will be traveling a gradually downward course at the same time that their foreign is traveling a gradually upward course. And I don't think you really want to buy a company that's traveling downward with half of it and traveling upward with the other half, because if you have the choice of buying a company that's 95% foreign and traveling upward with 95% of the company, it's not that these companies are in difficulties, it's not that they're not doing a good job, they're doing a super job, but they are just caught market-wise in an area that's not very strong for the next, I think, 10 years. So thank you very much, and we can come back on questions to other thoughts that come to you. Thank you.